3 days ago, I took the oath of office and we began the golden age of America.
Welcome back for another weekly market recap. And as for the intro, welcome to the golden age. Now, it's been a particularly intense week. As for, the news, you couldn't really say that the economic calendar was shallow, but I think most of what you can read on the screen right now, especially coming out of, UK, Europe, Canada, it was mainly taken over by Trump talking and everything he was discussing throughout his interventions, his speeches, and whatnot. I think the only real substantial piece of news that many people were anticipating was the BOJ coming out with the rate hiking decision. Looks like they finally went for the hike. So they increased 25 basis points, and I mean, I guess it was largely anticipated, but at the same time, it was much discussed because of the implications of the yen carry trade and whatnot. So let's try to get that out of the way first and foremost. As you can see, there is not a really huge response in the Japanese yen against the US dollar. I mean, if you remember back in August 2024, it was a much bigger type of reaction. So I don't know, probably, I mean, although the market might be a little bit worried about the yen carry trade blowing up, uh, what's going on in the United States with the new administration, it's taking precedence right now. So you look at the dollar as measured by the DXY, which again, for the major part, always a good reminder, but the DXY it's mainly composed by the euro for almost 60% and the Japanese yen, and all the rest are what GBP, Canadian dollar. I mean, it tends to exclude a lot of different currencies, especially in emerging market. Uh, but you got a more broad index for the dollar on the Fred database if you want to check it out. Okay, so you've seen the euro coming up, basically the pound coming up, the Swiss franc had a little bit of a stabilizing pattern, and Canadian dollar it basically halted the drop. So most of that, I guess, was due to Trump not being so extremely hawkish about tariffs and whatnot. I mean, he talked about tariffs, of course, but it wasn't like the Armageddon and Doomsday type of event everyone was maybe anticipating, like tariffs on everyone, 25% on China, 10% all across the globe. I mean, it was a bit more subdued, and especially it was more about we are announcing tariffs now if we don't see what we like to see, but it's not like we are implementing them right away. So that was the market reaction. Now, as for the yen and the Bank of Japan, I think they're still in the same place. I mean, I think they're still stuck between the proverbial hammer and the hard place. We have discussed this topic in the past. I mean, it's very hard to be in that situation. On one hand, if they try to save the currency by hiking rates, they take the chance of disrupting the GGB's market. And on the other hand, if you want to kind of safeguard the JGB market, you take the chance of fucking the currency even more. And when you think of the Japanese economy, which is importing a lot of, food, energy, raw materials for the industry, and all of that is priced in dollars. So you need to pay your input costs in dollar, and the yen is going down against the dollar. So you're basically crashed, all right? It is true that it should favor you on the side of exports, but I mean, it's actually true that throughout 2024, the industry, the sectors in Japan which are exporting, they saw good revenues. But I mean, overall, on net balance, the economy usually would suffer from these conditions. All right. So that was for the quick hint at the Bank of Japan. But the real topic, of course, was Trump. And I mean, he came out with the inauguration speech and all the executive orders already signed and thrown out. And the peak of the week was the speech he gave remotely to the World Economic Forum in Davos. or Davos. I'm not sure about the accent there. But anyway, you got the point. And as a good politician he started out completely trying to demolish the previous administration, highlighting all the failures and all the flaws of who came before him. And if you don't remember, just let's have a quick recap of that, right?
Over the past 4 years, our government racked up $8 trillion in wasteful deficit spending and inflicted nation-wrecking energy restrictions, crippling regulations, and hidden taxes like never before. The result is the worst inflation crisis in modern history and sky-high interest rates for our citizens and even throughout the world. Because of these ruinous policies, total government spending this year is $1.5 trillion higher than was projected to occur when I left office just 4 years ago. Likewise, the cost of servicing the debt is more than 230% higher than was projected in 2020.
So now after that, I mean, is it true? Is it not? I mean, again, as always, with everything in politics, is always nuanced, right? Because I mean, it is true that if you look at what the Biden administration have done, yeah, I mean, they kept on bringing up measurements and policies which were massively inflationary given the circumstances. So global economy shut down, lockdown, supply chain disrupted. But, it's also true that the one signing the first PPP authorization was Trump in April 2020. Now, you can say that Trump was only responding to a crisis, and then the Biden administration, which came in after that, they kept on this massive response, although it wasn't that necessary, needed anymore. You could say the economy was trying to normalize itself. We got the reopening, so keeping up these checks to households, the student loans forgiveness and whatnot, it just added fuel on the fire of inflation. But I mean, it's always it's always easy to judge in hindsight, right? Um, then on top of it, you could add the conspiracy, right, about the Biden administration trying to keep on flooding the economy and potential voters with more money just to buy their votes. I honestly, I don't know. I mean, could just be that they were so poor at choosing the correct policies. I mean, who knows, right? Um, Trump then came up with a few more points about what his administration, or at least the intentions of his administration, will be, and how he will try to differentiate himself from the ones which came before him. And again, it was always about make America great again and all the usual Trump rhetoric. Just a little bit of an example of that, right?
On day one, I signed an executive order directing every member of my cabinet to marshal all powers at their disposal to defeat inflation and reduce the cost of daily life. I imposed a federal hiring freeze, a federal regulation freeze, a foreign aid freeze, and I created the new Department of Government Efficiency. I terminated the ridiculous and incredibly wasteful Green New Deal. I call it the Green New Scam. Withdrew from the one-sided Paris Climate Accord and ended the insane and costly electric vehicle mandate. We're going to let people buy the car they want to buy.
And so now, after that, I mean, what would you make of it? Uh, Look, I'm no geopolitical or not even political expert for what matters. So the only thing I have to offer is my opinion, which is as good as anyone else. And before we go along, or before we go ahead, actually, let's clear out the air a little bit. I might say something which you like, I might say something which you don't like. The main point is it's inconsequential at the end of the day. My opinion, it's really inconsequential. And it shouldn't bear any type of consequence to what your opinion is. Okay. So you might like it, you might not. But if you are here to hear your opinion coming out of my mouth, I'm sorry, you are in the wrong place. So before anyone gets offended, just be aware I don't give a shit if you get offended. All right. Now, with that out of the way, is it net positive, this new Department of Government Efficiency, Doge, ironically, right? I mean, maybe, maybe not. I would say it is a bit strange that you would like to cut government spending by introducing another government agency, right? So shouldn't that increase the spending? And that we need to see if that spending for the new agency is going to be efficient enough to bring down the spending on the old agencies. I, I'm a bit skeptical. So as I'm skeptical about this thing about bringing down the IRS in favor of the external revenue agency, I wouldn't be surprised if in 10 years from now the US ends up having two uh, revenues agencies instead of just one. As ironic as it might sound, but I wouldn't be surprised. Uh, there was a famous quote about government programs and agencies, right? There is no more permanent programs. There are government programs. So we'll see about that. Who knows? And the other thing about basically divorcing, pulling out, giving up on this Green New Deal, on that one, I must say I'm particularly sympathetic, especially because we've seen in Europe it made more arms than good. Quite honestly, it was basically more hurting than beneficial. And look, at the end of the day, it's all well and good up until the point it's a marketing campaign. When people in the real world, in the real economy, and they start to see the effects and they realized all those massive benefits, all that kumbaya wokeism type of bullshit was just a facade. And they look at the wallets, they look at their banking accounts, and they do realize they are much poorer now compared to 3, 4, 5 years ago. They're going to have a change of heart because at the end of the day, money talks. So I I'm kind of in line with you know letting people buy the cars they want. And again, especially in Europe, Europe, I guess it's completely fucked up to some degrees. If you look at the population of Europe and the uh, pollution per capita, which is brought in the global system by Europe alone, that is really nothing. I mean, we could stop using carbon fuels tomorrow and it wouldn't move the needle on a global scale because those countries and those economies which are actually the major responsible for the pollution we see are the US, China, India, other Asian economies, and maybe even in South America. The point is, you can't really impose to those people to stop using carbon fuels because the main objection you're going to get is, well, that's what you basically built up your own wealth. So it was fine when you did it, and now we can't, and we are doomed to stay poor forever. It's never going to work, you know. So again, I mean, I don't really see a lot of sense and logic in this hate for carbon fuels and in bringing up continuously these climate change, these global warming type of issue. I mean, at the end of the day, if you check history, unfortunately, whether you like it or not, the planet Earth was subject to a lot of different climate changes throughout its history. So quantifying the impact that humankind had on it, I mean, definitely we had some sort of an impact. What I'm just saying is when you start to measure the costs and the benefits, whether you think it's good or bad, whether you think you should bear the costs because the benefits are way higher in the long run, you also need to consider that the individual, he doesn't live in the long run. He lives in the present. He lives in the here and now. So at a point, you're going to have a shift in the mentality because again, people are just focused on the short-term benefits. Like, take me, for instance. Do you think I do really care about what could happen in 100 years? No. I mean, naturally, I won't, because I'm not going to be around in 100 years. So who the fuck cares, right? And so did the ones which came before us. It's like that. I mean, it's harsh to hear, but you can't change human nature, all right? So enough with that. Let's just move along and let's have a look at the rest of the charts. So let's have a brief look at BRICS currencies as usual. So Chinese yuan, Russian rubles, and all the rest, Indian rupee, and the Brazilian real. They all rebounded, of course, because I guess the major point of them being beaten up, it was many people hedging themselves against the risk of Trump coming in, gun blazing, and saying he would have implemented these tariffs, which naturally would have impaired the dollar flows from the US into these economies. Now, especially China. I mean, maybe to a lesser degree, of course, Russia, maybe India, but again, we do know that India, to some degree, suffered by admission of his own central bank governor. They suffered a bit of a dollar shortage. It all comes down to funding and how the role of global reserve, the US dollar actually takes on impact these dynamics. So it looks like those edges have been removed. We'll see if it's a short-term thing or it's going to be a sustained type of thing. But it looks like, at least standing to the FX market, as for these four currencies right here, things are getting a bit better now that the impelling risk, it's no more there. So again, they always move on what they forecast ahead, right? Uh, let's have a look at the DXY. And as you can see, I mean, it was also present in the previous charts, but here is the DXY alone. The DXY moved down this week. Same dynamics, you could say. You add on top of it both the BOJ coming out hawkish and what Trump said, and you see the DXY taking a little bit of a dump. Now, from a structural standpoint, is it on a weekly time frame a trend reversal? No, I mean, at the end of it, we are just tapping back into previous support. If you ideally, you could draw a line in here, right? And there's nothing which is a major warning of a trend reversal in the DXY. There was, although, a clarification I wanted to give out compared to what I said last week. Now, I still have the 10-year yield on this chart right here, okay? And you can see that pretty much recently the DXY has been particularly correlated with the 10-year yield. And as I said, we do know that currencies tend to seek yields. Now, although that is true, and it's been true over the last, we'll call it 2 years, more or less, that's not always the case. And I know it's easy to be carried away by recency bias and whatnot, but let's just say it is also important and quite interesting to see what the long-term correlations in between these two assets might be. So if you check these charts right here, right, it looks like in this short period of time that you can see now on the screen, um, the 10-year treasury and the US dollar were particularly correlated. And if you look at the 3-month rolling correlation, right, you see that it was pretty much solid. I mean, it stayed in an average of 40, 44, 45%. And more recently, it was around 75%. So, over the last 2 years, call it good correlation. But if then you zoom out enough, and let's say you take the period from now going backwards to, let's say, 2010 after the GFC, then you see that this correlation as measured by the 3-month rolling correlation factor, it starts to deteriorate a little bit. And if you go even farther than that, and if you look at a very long-term trend chart, you see that these correlation, it's a bit up in the air, right? There are periods where you see the DXY going up and you see yields moving in a different direction, or vice versa, the opposite case. So again, don't be misled in thinking that when it comes down to macro, 1, 2, even 3 years of what could be a very solid correlation actually tell the truth about everything which is, or it might be, behind it. All right. And I'm not I'm not particularly sure it could have solid evidences in math, but let's try to picture these two scenarios, right? Let's say all of a sudden you start to see the DXY going up and in this case, the 10-year treasury going down. Well, that's not good. Not only would break the correlation, but the reasons why it could break the correlation are not particularly good. It's basically a flight to safety, right? Because you would have the DXY going up, so everyone is dumping their local currencies to buy dollars. And at the same time, since the yields are coming down, for instance, everyone is basically massively buying into US treasuries. So it's your classical flight to safety type of dynamic. On the opposite case, let's say you see the DXY coming down and the 10-year yield keep on going higher or staying relatively higher. Well, you could read into it, or at least you could build up the case for it to be particularly good, because you see the dollar going down, which means that there is not a shortage of dollars outside of the US, so dollars are actually flowing, and it could be because global trades have actually been improved, or because uh, funding issues have been resolved. And at the same time, you see yields going up, which means that since yields, again, are a reflection of future growth and inflation expectations, so you got growth and inflation expectations actually reflected in yields while the DXY is going down, so no major liquidity issues. So that should depict some sort of a rosy picture, right? Well, it could be your classic Goldilocks, but it could also be your classic uh, uh, growth type of a scenario. I mean, just quickly, let's see, have we ever had something like that with yields going up and the dollar coming back lower? I mean, we had something like it, but it was coming out, well, yeah, I mean, after the dot-com bust for a brief period throughout 2005, you see how the 10-year is going up and the DXY is going down up until the point you get into the financial crisis. So things started to look grim already in 2007, and you can kind of spot it by the dollar keep on going down, yields inverting, and then you see the bottom in the dollar, and everything takes the turn. And here is what we are. Well, it's not like we are, but just a few minutes ago, that's the doomsday scenario with yields collapsing and the dollar ripping to the upside. That's the classical flight to safety type of scenario. Now I know this chart is a bit messed up. I'm usually using it for some sort of macro type of thing, so I go highlighted the QEs of the past and whatnot. But I mean, you get the point, right? Now let's move on to gold. Again, we have been particularly constructive and positive on gold, and again, it's keeping on grinding to the upside. We retested this level once again. We were stopped at resistance before, and this week we broke above resistance, retested it, confirmed as a potential flip, and we got another push to the upside. Not new all-time highs for now. Pretty close, but not yet. Could we get it? I mean, if the trend continues, why not? So again, I guess it's pretty self-explanatory with gold. Uh, Still going up, still constructive. No major issues from a structural standpoint if you just look at the chart. And yeah, I guess no matter what, no matter all the hopes, right? The positive sentiment right now uh, for the economy. I mean, especially in the United States, that it's a bit different. The rest of the world, it's still particularly beaten down, but on net balance, I guess people are still buying gold for the same reasons as before. Mm, It's an insurance policy. It kind of help if you want to de-risk or build up an edge against being exposed to the dollar system, especially now that you got Trump in office. So you think about all the other countries. What if this madman all of a sudden comes out and says, "Oh, he's gonna sanction me as well," as he did with Korea, Iran, Russia, and whatnot? I don't want to be next. So if I can buy gold now ahead of it, well, gold is no one liability, so it's always better than being completely exposed to treasuries, which could be seized by the US government. So, I mean, it's the usual suspects driving the price of gold, and of course the dollar, right? Dollar keep on going to the upside, and therefore it's not bad to be in gold, since the gold is it's outperforming the dollar, right? Uh, let's move on to Bitcoin. Uh, what we talked about last week basically happened throughout the first 2 days of the week. So backfill to the downside and push up new all-time highs. Then, it was a little bit of a swing failure, but look, the problem with swing failure patterns is that ideally you want to see continuation right away. The fact that we got this swing failure, price came back down and immediately reapproached the area, and now it's particularly stable below it, it would suggest a much more constructive behavior, kind of like gold. And don't discard the fact that another major driver for Bitcoin right now could be Trump. And of course, I've seen, although I didn't really dig into it, but I've seen there is this senator, or how do you call a woman? It's still a senator, right? It's not like you got that difference in between congressman and congresswoman. The senator is a senator, right? I should document myself on it. But anyway, you got the Cynthia Lummis. Not sure. Probably I'm gonna butcher the name, but she is, let's say, about to get into office, or at least it would be the first pick, as far as I've understood so far. And she seemed to be particularly crypto friendly, at least standing to Twitter, and of course standing to Trump. So that could be another major driver, as for the sentiment, because then we know that sentiment drives actions. And so, all things considered, neutral, slightly bullish oriented on Bitcoin at the current moment in time. And even, let's say, even if you got a drop in Bitcoin, let's say, I mean, even if we drop back to these levels, it wouldn't be a major catastrophe up until the point we can bounce off of this region and maintaining the current structure. At this point, it's, I don't know, you should really starting to be worried only if you see Bitcoin dumping and then starting to, again, stalling at lows of this macro range. I honestly don't think this is going to happen, at least in the short term, like next week, as usual. Could be wrong, but I do think we still have a positive momentum in this asset. Same as gold, same as many other things. All right. So for now, I maintain my neutral, slightly bullish stance on Bitcoin. Before talking about oil, let's get back a little bit to what Trump said about energy, about oil. Let's have a little bit of a recap of what he said.
I declared a national energy emergency, and it's so important, national energy emergency, to unlock the liquid gold under our feet and pave the way for rapid approvals of new energy infrastructure. The United States has the largest amount of oil and gas of any country on earth, and we're going to use it. Not only will this reduce the cost of virtually all goods and services, it'll make the United States a manufacturing superpower and the world capital of artificial intelligence and crypto. And I'm also going to ask Saudi Arabia and OPEC to bring down the cost of oil. You got to bring it down, which frankly, I'm surprised they didn't do before the election. That didn't show a lot of love by them not doing it. I was a little surprised by that. If the price came down, the Russia-Ukraine war would end immediately. Right now, the price is high enough that that war will continue. You got to bring down the oil price. You got to end that war. They should have done it long ago. They're very responsible, actually, to a certain extent, for what's taking place. Millions of lives are being lost. With oil prices going down, I'll demand that interest rates drop immediately. And likewise, they should be dropping all over the world. Interest rates should follow us.
Well, there's a lot to unpack there, right? Again, we get back to the same point. Everything is energy, and basically everything revolves around energy. In just less than 1 minute, you've seen how many things can be connected to energy, from the fight to inflation, from creating the conditions for growth and future development in AI, which is kind of the technological race of the decade, most likely, and potentially of the century. And of course, to bring down the costs of operation for many different business and therefore actually stimulating the private sector and corporations to produce more, hire more, and therefore more people get wages and therefore more people get spending capabilities, and you reignite the economic machine. uh, he also threw the Russia-Ukraine war into it, which again, I mean, yeah, he's always been a proponent of the fact that if you bring down the price of oil, and oil is the major source of revenues for Russia, right? Then they wouldn't have the means to keep on conducting their war, to keep on waging war in Ukraine. I mean, it sounds all good on paper. I think, if you start digging into it way more than just 40, 50 seconds of a speech, you might find some problems and some further issues to be overcome. But pretty much, I guess, you can't deny he got his points, right? So let's have a look at oil. Let's see what happened. Um, it dropped basically. Um, After the spike, it basically came all the way back down. Now, it didn't really make all these move to the downside because of what Trump said. I mean, surely it could have had an impact, but if you check the dates, oil already closed, kind of confirming a short-term top on Friday, and then you got Monday, Tuesday, yeah, keep on coming down. And when he gave this speech at the World Economic Forum, it was basically what? I don't remember. It was Thursday? Well, anyway, oil was already in this region. I'm now making a little bit of a mess with the dates. But was it all Trump? Was it not? Could also be that oil was massively extended to the upside and it needed to pull back. So the interesting part, we'll see what it's going to come from here. For instance, will oil bounce at this level and keep on going higher, or we are going to crack this region and it's going to get back into the previous range, right? We'll see, I guess. I keep on maintaining my stand about not being so keen in seeing oil spiking massively to the upside. I already went over it in last week's video, so I'm not going to repeat myself. But it is, I guess it's true. Like Trump has a point. If you think about the destruction that we've seen in aggregate demand, the fact that oil basically stayed in this range at these levels, it's just because they cut the supply. If you didn't have the supply cuts from OPEC, I mean, I'm just guessing, but most likely we would have seen oil trading below 60, if not even lower than that. All right. Why would the Saudis and the OPEC cut production? Well, to maintain their profit margins. I guess, I mean, it would be the first thing that I could come up with. Since you can control the supply, you can influence the price. Um, it's probably something which is only good for them in the short term, because if you keep on starving the world of oil, or at least cheap oil, or a price level for oil that the world can afford, at a point you're going to see a decline in the purchases of oil. Of course, it's going to come really later on in the cycle, because as we said, there is an inelasticity factor when it comes down to energy demand. But I don't think trying to manipulate this market the way they did it, it's something which could be sustainable over a long period of time. And so Trump is trying again to make a deal with the Saudis. I mean, if you check history, the US has a bit of a good relationship with the Saudis, right? Everything goes back to the petrodollar, the agreements, which, by the way, was never really a treaty. If you check, that there was no treaty about oil being sold in USD. It was, that sort of a gentleman agreement, kind of like, yeah, you need to sell your precious commodity in dollars, and by doing so, on the other hand, we will help you out developing your economy, developing your country and your society. We will assist you. We will provide you technology. You also need to bear in mind that when it was, what was it, the 70s, something like it. I mean, things were particularly different compared to now. So back then, the US were the undisputed superpower. So it was hard to refuse that type of a handout, right? So can Trump really influence the OPEC that much? Maybe, maybe not. But also just need to consider that it doesn't need to be political only. You could only you could also do it economically, as he said, by extracting more oil from the US soil. There is a little bit of a controversy there, because if you check historically, American oil producers, they tend to do poorly as for the revenues under Republicans administrations. Because of what? Well, because historically Republicans are all for drill, baby, drill. But the more you drill, the more supply you bring online and in the market. The more supply you bring in, the lower the price. So your margins tend to shrink a little bit. While instead, with Democrats, they were particularly averse to drill, baby, drill. So supply constriction, higher prices, higher revenues for those companies which were involved in the extraction, the distribution, and whatnot. So many people actually raise the objection, yeah, but if we do that, aren't we hurting our local companies and business? I mean, could still subsidize that. You're spending so much money for so much bullshit. Why wouldn't you spend some public money to actually enhance the recovering of the economy? I guess, if you do that, then you allow everyone else to have cheap energy, and therefore you reignite the economy. And what you might lose in subsidizing those activities might be gained back with people making more money, and therefore the government collecting more revenues from them. I mean, it's just a theory. You would have to take like 8 blackboards and do all the math. I guess even at that point, it would be hard to really have a precise and accurate forecast, but it was just a topic of discussion. I think, overall, he also has a point when he says if energy goes down, inflation should go down, therefore rates should go down. And if rates should just go down, it's going to be a less of a problem to keep on financing our government, and we shouldn't be that worried about the debt. We could just roll it over with a with much easier conditions. And that's not only true for the government, but for corporations themselves. As we said, we got refinancing wall hitting in 2025 and 2026. A lot of debt need to be rolled over. So, it could also, everything of what he said, I guess it's fitting the long-term vision, the long-term plan that he might has for the US and also uh, the global economic system and global geopolitics. Who knows? So, uh, as for the chart alone, I guess neutral more than anything else. I guess personally, I would need to see what happens here. Can we bounce? Do we drop? Right? So I guess, just wait and see. As for the yields, he said he would like to see them coming down. There was a nice, uh, it was taken out from Twitter, so I don't know if it was taken out of context, but he was answering some questions and he was asked like, do you think Jerome Powell would actually agree with you in lowering interest rates if you demand it? And he was like, yeah. So again, these kind of, it's not really a fight, or at least maybe behind closed doors, but not in public. It's not really a fight. Uh, but there is this kind of a dualism in between what Trump would want and what Powell is willing or is able to deliver as for monetary policy. Taking a look at rates or yields in this case, well, they have been particularly stable this week, right? They picked out a little bit. They came back down, especially on the long end, but then they got stable right around the previous support. Same on the medium end of the curve. The short end, of course, 2 years in this case, seems a bit more toppy, but that's just, it's much more influenced by monetary policy, and in this case, the potential influence that actual policy could have on monetary policy. So the White House and the Fed. I think, as we have discussed throughout these past 2-3 weeks, rates will eventually come lower for one reason or another. I'm not gonna repeat the whole thing right now. It would take ages. And conversely, still same opinion on bonds. They had this little bit of a rebound. Didn't really break the structure. No the TLT, no the others. Still, the short end, it's much more bullish, of course. But just don't discard this fact. I always try to remind myself these. It's called convexity. So the rate or the magnitude of a potential move that you tend to have at the long end of the curve, as for the price of the asset, is much bigger relative to the move in the interest rates. So although you might see interest rates at the long end moving relatively slower compared to the short end, the move in the asset, in the underlying treasuries, on the long end could be much more violent. It is just simple math at the end of the day. A lot of things coming into play. What is called term premia, which I recently debated, but again, it's still a thing, if you want to call it that. So, that's just a fact. It's just simple bond math. So could also consider that. I guess, we are going to have FOMC not that so distant into the future. So we'll see what Powell is going to say. Right now, the market is pricing in a pause. I guess we'll see. Don't really think that this meeting alone, it's going to be, I think it's going to be boring, to be honest. They are probably going to repeat the same old things they have repeated since December, basically. So I'm not expecting a lot of news or huge environmental shifting things to be said at these FOMC. But we'll see, of course, we'll see. So with that out of the way, we can now transition into equities and a few bullet points Trump highlighted as for, what his vision is for, the more core sectors of the economy, such corporations, business, the investments, and whatnot. Right? Let's have a look.
My administration has also begun the largest deregulation campaign in history, far exceeding even the record setting efforts of my last term. I have promised to eliminate 10 old regulations for every new regulation, which will soon put many thousands of dollars back in the pockets of American families. To further unleash our economy, our majorities in the House and Senate, which we also took along with the presidency, are going to pass the largest tax cut in American history, including massive tax cuts for workers and family and big tax cuts for domestic producers and manufacturers. And we're working with the Democrats on getting an extension of the original Trump tax cuts, as you probably know, by just reading any paper. My message to every business in the world is very simple. Come make your product in America, and we will give you among the lowest taxes of any nation on earth. We're bringing them down very substantially, even from the original Trump tax cuts. But if you don't make your product in America, which is your prerogative, then very simply, you will have to pay a tariff, differing amounts, but a tariff which will direct hundreds of billions of dollars and even trillions of dollars into our treasury to strengthen our economy and pay down debt. SoftBank has announced between a $100 and $200 billion investment in the U.S. economy because of the election result. And just 2 days ago, Oracle, SoftBank, and OpenAI announced a $500 billion investment in AI infrastructure. Other companies likewise have announced billions and billions and billions, adding up to trillions of investment in America, in the United States. And it's also reported today in the papers that Saudi Arabia will be investing at least $600 billion in America, but I'll be asking the Crown Prince, who's a fantastic guy, to round it out to around $1 trillion. I think they'll do that because we've been very good to them.
So again, even in here, I guess there should be a lot to be discussed, more than what we got time for. You can clearly see that the theme is always the same: to put America first, to put America's corporations first, and to put American workers first. That should be the aim at the end of it. So increasing domestic investments and trying to spark economic growth, right? Pardon me. I guess I'm not gonna waste a lot of time on tariffs, because at this point I talked about them in the past, and I guess at this point you just type that on the internet and pretty much everyone has his own podcast or video about tariffs. My stand is always the same. I think everyone is talking about them as they should lead to inflation no matter what. I'm on a different side of the fence in this case. I do think they could be inflationary in some sectors or for a period of time, but overall, on net balance, I don't think they're going to impact and giving that inflationary push that everyone is awaiting. Um, it's just, you should really, if you got time, I might going to link a few a few images of that. If you got time to spare, you would really want to listen to Michael Every. And if you are interested in geopolitics and whatnot, because there is much more than the simple economic reality to unpack when it comes down to tariffs. There is history there, and there's a lot which have to do with what Avery calls the grand macro strategy. And so, everything revolves around not anymore what is GDP in nominal terms, but what is GDP for. I'm not going to dive into it. Obviously, he's doing a much better job than me at it, of course. But if you want to listen to a bit more of ramifications about tariffs and what they mean and how they could be used or not used and how they're actually being used just recently, look at what happened in Canada and Mexico by the simple talk of tariffs, right? So again, check him out. He's a really good guy. He puts out really good content. As for the rest, with that out of the way, I would just keep on looking at what the current and most recent data points coming out of the US would be as for the real economy and what could be related to companies and therefore the stock market. Now, first of all, I came across it was some sort of an article talking about the Cass Freight Index. It's nothing fancy at the very end of the day. It just shows you the amount of freight traffic in North America. Now, you might say, well, how does it impact the overall economic output? At the end of the day, industrial manufacturing, that's just what, 1/3 of the overall economy? Yeah, it is, but it is also true that it's a good grasp. It's a good indication of consumers' situation. Because of course, if you can't buy stuff, there are not going to be many reasons to move stuff around, right? If nobody is buying it. So it could be an indication of consumers to be tapped out. Although, to be fair, it's diverging from what the rest of the economy is doing for over the last 2 years, I guess. So I think even there, it's going to be a problem about, you know, looking if this correlation will keep on going on, or if at a point this correlation will actually manifest itself in some, green economic event. Okay. Another point I would like to touch on, it would be the housing market. Now, I don't go over the housing market a lot, but it just so happened that yesterday night I was having this conversation in between me and two colleagues, I should call them, right, about the housing market in the United States. Look, if you remember last week, we had a look at the consumer price index if you subtract the shelter component. So turns out that although, as we've seen, that would have brought down the CPI below Fed target, recently they came out with a new sort of I don't know if you want to call it indicator or measurement, whatever. It's basically something which measures the new rents. So, the new tenant rents. The main reason for it would be that, rents, they tend to be renewed at a very slow pace. Therefore, if you just based your analysis on what the current rents are, that data point, that data series, takes the chance of being particularly laggy, right? While if you just look at the new rents, it should give you a much more precise and accurate read on what the housing market is doing. Of course, as for the rent alone, we're not talking about selling and buying a house, right? But considering that shelter takes out a huge chunk of the CPI overall, it might be worth to be considered, because that's what it's going to impact the PC, the CPI, which are probably just going to come in next, and I guess even the next FOMC if they're looking at it. So if you look at this indicator, you see that it's basically collapsing, or at least it collapsed over the last few months, way ahead of the normal all tenant index as for the rent. And it should be a major driver to the downside for the headline CPI at the end of the day. So again, from here, you can then derive to what Powell could potentially read into it, and what and which his decisions might be for interest rates. Okay, it's just another tool, it's just another interesting thing you can look at. So as for the housing market, again, we are not really seeing it crashing. I mean, it's relatively stable at the end of the day, but you can kind of see the cracks. All right. So if you look, for instance, at the amount of home sales contracts which have been called off, right, that is ticking up. So it's not good for the housing market in general. That being said, if you then look at the existing home sales, they actually raised recently. So, it's a bit of that, it's a bit of these. It's just still, I guess it's still in balance, right? It's not like you should forecast some sort of a housing market crisis like in 2008, okay? But again, these things, especially in the housing market, they take time, a lot of time, because the housing market is it's a very slow market, as we've seen. As for the rest, if you check around, especially if you look at what was that, the National Small Business, and I forgot the rest of the acronym. But anyway, there are a bunch of charts showing that at the end of the day, if you take what Trump said at face value, it's easy to jump on the conclusion that the main risk for what he's promising, or what he promised, throughout the campaign and what could actually be the reality. The main risk for that, at the current moment in time, it is actually the timing of it. So timing and expectations, because there are huge expectations on these promises to be delivered by Trump, and the more you delay to deliver those promises, the more the market could, I'm saying could, start to realize it got ahead of itself and started to price in stuff that now we do realize it's going to take a bit more time to come to fruition. So that's the problem with expectations. They are oftentimes, not always, but oftentimes made to be unmet. And you can see it in a lot of very different charts and analytics about confidence, expectations, and whatnot. As for even it could be earnings for the stock market, it could be revenues, it could be small business confidence, it could be some sort of a composite index for confidence, could also be confidence or expectation about new sales against the actual sales, or it could be the measurement of confidence from the CEOs of the S&P 500. You kind of see this phenomenon going around pretty much all across the board. There is a lot of confidence, and from that, of course, you can derive, if there is confidence in the economy and growth, that should be reflected in the hiring rate, because if businesses are confident, they should hire more. Although we've seen they're actually hiring less now. So that could also impact your read and your vision of the labor market. So, I mean, it's all connected at the end of it. And the same way everything went up at the same time, basically, well, it could also come back down all at the same time. So, it's again, it's very difficult to try to forecast this stuff. But, you know, other than that, if you want to check what the market reaction was for, the S&P, the Nasdaq, and whatnot, even small caps, let's remember what was the base premise we got last week getting into Trump inauguration and whatnot. And then we're going to check if, scenario A or scenario B played out in actual facts. All right. I think we might see a little bit of a rally. Just be aware of what may come Monday or Tuesday with inauguration and these supposedly 100 of executive orders or already ready to go. And the market could react particularly negatively or particularly positively. Monday afternoon or Tuesday morning, 25% tariffs on China, 10% on everyone else. Europe, Canada, Mexico. Probably not good for markets. Or, the opposite case. The inauguration comes in, no talks at all about tariffs. And the market, which maybe was so worried, it's going to say, oh, see, it was just a big nothing burger. It's not going to implement them right away. So keep on buying, right? Bid and bid, bid up, right? So I mean, the knee-jerk reaction we're going to see in markets is going to be interesting. As for the SPY, in this case, we made new all-time highs. So spiders, even the ES futures, they made new all-time highs. The Nasdaq didn't really follow through, but I mean, you can't deny it had a pretty good week. A little bit of a pullback at the end of the week in both, but again, at the end of the day, it's not bad. Now, if you just check the RSI, are we at risk of some sort of a bearish divergence on the spiders? Maybe, but I mean, you should confirm in it first, and then now that you are above all the major moving averages, there's always the question about, are we going to break them down once again, or are they going to act support this time around? So no matter how you look at it, and people have tried to look at it in a very grim type of a way, but still, the stock market, it's particularly resilient at the current moment in time. So, I mean, what you're going to do about that, right? If you check, for instance, the futures, again, we've seen the same. We have been discussing last week this breakout of the trend line, retest, and up we go. And basically, that's what we got. So, looking at that in comparison with the other two indices, so the Dow and the Russell, still, it's a bit of a mixed up result, right? I mean, the one which is really extending to the upside in this moment, it's the Dow. All right. So of course the S&P again, it's going up relatively good. Nasdaq, it's lagging a little bit, which is a bit strange. It's always strange to me when I see the S&P leading and NQ futures or the Qs lagging, because I would always be more confident if I'd see the tech sector leading, because over the last 20 years these markets have been basically driven by the growth sector, so tech. The Russell still no new all-time highs, still in the limbo. And I guess again, usual talks, it's probably the one which is much more impacted by interest rates, and they are pretty much elevated yet. So even if you want to read a bit of an exuberance and maybe overconfidence in this move up for the Dow, it's not really followed by the Russell. But again, I guess it's all a matter of expectation now. Trump promised a lot, and I guess the market tried to get ahead of it. So the problem now becomes, will he be able to deliver in a reasonable amount of time before the market, kind of gets impatient to wait, and it decide that it's now time to revert a little bit. Now, I'm not talking about crashes, just to be clear, but my ultimate type of analysis is that right now there is a huge risk premium on stocks. That doesn't mean they're going to crash. It just means that you are taking on a higher risk. So again, the downside risk in this case, when you compare it with the upside risk, it's becoming a little bit of an issue in my view, especially because now you go higher rates. So you go other forms of investment which are competing with the returns in the S&P, for instance, but they are offering a much lower rate of risk, like bonds, money market funds, once again. So wouldn't take a lot to completely revert this process and this confidence. I'd say just keep on being on the high watch for it, because the risk is always, around the next corner. But other than that, you gotta be fair. You gotta call it spade to spade and say that for now, as for the charts, there is not an immediate risk, a downside risk in equities. Could be next week, could be next month, could be next quarter, of course. Everything is driven by liquidity. So, for instance, to just circle back, if you think about the housing market, right? Most of the loans which were extended out to allow people to then buy the real estate, most of them were extended out by small regional banks. And those small regional banks, they already have a good chunk of their balance sheets upside down because rates are high. So all those treasuries they bought throughout the pandemic, they're now massively underwater. So they are sitting on a unrealized loss. That was good up until we got the BTFP from the Fed. But if you add on top of it another sort of negative thing, like for instance a bit of a flexion in the housing market, then what you could get is, from the standpoint of those banks, you could have their balance sheets being impacted even more, because they got, on one side of the balance sheet, they got the loan as an asset, and the collateral for that asset is the actual underlying house, which was bought up with the loan. So if you got a flexion in the housing market, the value of the collateral goes down, but the asset, the loan, it remains the same. So you get in a little bit of a trouble there. Hopefully it doesn't happen, but that could impact the stock market as well, because of many different dynamics. Like for instance, Americans, they tend to hold a good part of their net worth in their house. Then you got the ramifications with the wealth effect and whatnot. So as for now, I remain bullish on stocks. Why not? But I'm still on a high watch for something to change. And this year, as I said, it might be a very volatile year. So just be aware of that. We might not see the 20+% returns year over year for stocks. So just, be aware of that. All right. And that basically ends up the charts for today. Don't have anything else to go off of. So I guess, we could, beside that, those were the main things Trump talked about that could impact the economy and the markets in the first place. It wasn't really everything he said. There could be something else, but I don't think that could impact markets a lot. Just for the sake of it, we are gonna go through real quick with a brief comment, and this is where we might, or maybe not, I don't know, we might disagree on a few statements that I'm gonna give. And I'm not even gonna say I'm sorry if we do not agree. It's just the way it is. And again, if you are in markets, always remember that different opinions, that's what makes a market. All right. So just take it for what it is. I'm not trying to preaching to anyone. I'm just expressing my own opinion. And if you don't like it, so be it. I mean, it's a free word. Up until the point it's not. Finger crossed, right? But let's look at what Trump had to say to conclude his speech. All right.
This week, I'm also taking swift action to stop the invasion at our southern border. They allowed people to come in at levels that nobody's ever seen before. It was ridiculous. I decided and declared to do, and very, very importantly, a national emergency on our border, immediately halted all entry of illegal border crossers, of which there were many, and began promptly returning the illegal trespassers back to the place from which they came. That action, as you've probably seen, has already started very strongly. I've deployed active duty U.S. military and National Guard troops to the border to assist in repelling the invasion. It was really an invasion. We will not allow our territory to be violated. After 4 long years, the United States is strong and sovereign and a beautiful nation. Once again, it's a strong, sovereign nation.
So I'd say controversial, as many other things with Trump. But look, at the end of the day, if you do believe in democracy, that's the mandate he got from the population. Immigration is always a very particular topic. We got kind of the same topic here where I live in Italy, in Europe. And look, as for the Trump case, there are many different ramifications, right? It's not really like taking off a bandage. You need to consider that, first of all, in practical terms, deporting millions of people is actually difficult. And then it implies a cost, all right? And then you need to factor in that although they are illegal aliens, they might provide cheap labor in specific sectors of the economy, such as agriculture, for instance. Furthermore, although it might not transpire in the data, they are actually contributing to aggregate demand. And guess what? Aggregate demand create revenues. Revenues are good for corporations because they lead to earning growth, and earning growth leads to stock appreciation in a hyper financialized economy. So, I mean, it's some sort of a 3D chess even in here, but let's just put it this way. I can get and I feel why such a huge chunk of the population are looking at these topics this way. Briefly, the way I see it, I would like to see immigration being conducted and managed as it was in the past. Like, a nation should really, quote unquote, import the amount of people the nation needs. Maybe you lack some specialized workers to do specific jobs, and you're going to import them from abroad. If you don't yet maybe have the schools and the education system to form them at home. But allowing people in just for the sake of it, and then they end up being a drag on the economy and on society as a whole instead of a research, I don't know. I don't see it as a plus. All right. And bear in mind, I'm not looking at the entire topic from a humanitarian standpoint. All right. I'm trying to leave the emotions completely out of the door. Whatever you think it's good and it's right to help people out, I'm just looking at it from a very pragmatic and strictly economical perspective, right? So that would be my stand on it.
I'm also going to ask all NATO nations to increase defense spending to 5% of GDP, which is what it should have been years ago. It was only at 2%, and most nations didn't pay until I came along. I insisted that they pay, and they did, because the United States was really paying the difference at that time, and it was unfair to the United States. But many, many things have been unfair for many years. to the United States. Before even taking office, my team negotiated a ceasefire agreement in the Middle East, which wouldn't have happened without us. As I think most of the people in the room know, our efforts to secure a peace settlement between Russia and Ukraine are now hopefully underway. It's so important to get that done. That is an absolute killing field. We've accomplished more in less than 4 days. We have really been working 4 days than other administrations have accomplished in 4 years, and we're just getting started. It's really an amazing thing to see, and the spirit and the light over our country has been incredible. Under the last administration, our nation has suffered greatly, but we're going to bring it back and make it greater, bigger, stronger, better than ever before.
So yeah, even in this case, I kind of get his point, and probably the feeling of the American population. I mean, NATO actually worked just because the US were the only functional army into it. When shit was hitting the fan, we were always looking up to onto the US, right? I mean, of course, there were missions and war scenarios where other forces contributed, but it's undeniable that the majority of the effort, both you know, from an economical standpoint, from a financial standpoint, and just by the simple fact of from the standpoint of actual men deployed, came from the US. If you think about the recent conflicts, right? So I can get why he's quote unquote demanding this type of effort from the other participants in NATO. Um, as a European, that scares me a little bit because, as you've just seen in the clip, we just don't have the money, and we're not growing at a pace which would allow us to find those money to commit to security, defense, and whatnot. Um, Here's the thing: the problem is that I've always seen it as, a nation, a state, whatever you want to call it. A state can be a state up until the point someone else can freely invade your borders and take over. If you can't defend the borders, you can't really call yourself a state. If the first person walking by can just get in and do what he likes, you're not a state. You're not a sovereign state, right? So I get the point. Defense is important, and if you don't have that, everything else kind of falls apart. And we've seen it that in Ukraine, right, or other countries. But yeah, money are always the problem. So I guess the eurozone and probably even Canada, right? We should really try to keep up one way or the other. Now we have seen a little bit of a push to get back to, committing a few more money to the army, to the navy, defense sector as a whole, but I don't think we are there yet. And I think it's gonna take time. So we'll see if the tycoon actually has enough patience for that. But there's another point where I think he's not wrong. I just think from the other side of the fence, I'm just thinking we are not ready. So kind of like with the economic promises and whatnot, I think the problem is the timing. We might achieve that even in Europe or Canada. The problem is how much time are you giving us to do that? Because that would be a big, distinction. Plus, you need to remind that, in Europe, there is not just one central government. So up until the point you get to a decision, there are a lot of discussions. That's the main flaw of Europe. It's not united. Many different countries, and it's impossible to run them all under the same, legislation or monetary framework. It's a huge dream, but under one point of view, it's a big of a mess, right? It's really, really a big melting pot, and it looks like no one, 90% of the times, no one is willing to cooperate with the others. So I don't know. That is a big question mark for me, and I'm not really worried about the economy or finance. I would be much more worried about that sort of things, right?
On day one, I signed an executive order to stop all government censorship. No longer will our government label the speech of our own citizens as misinformation or disinformation, which are the favorite words of censors and those who wish to stop the free exchange of ideas and, frankly, progress. We have saved free speech in America, and we've saved it strongly. My administration has taken action to abolish all discriminatory diversity, equity, and inclusion nonsense, and these are policies that were absolute nonsense throughout the government and the private sector. With the recent yet somewhat unexpected great Supreme Court decision just made, America will once again become a merit-based country. You have to hear that word, merit-based country. And I've made it official, an official policy of the United States, that there are only two genders, male and female. And we will have no men participating in women's sports, and transgender operations, which became the rage, will occur very rarely.
Nice play. I left the most controversial for the end. Yeah, it's a delicate subject. Look, there's no other way around it. I mean, I could rationalize a lot of bullshit. The simple fact is, when you talk about gender, that's one of the things where I'm 100% with the president. Again, there's just no need to explain it. I mean, either you think one way or you think the other. Okay, I'm all for freedom, right? So, pardon my French, but if you feel like you're gonna wake up one morning and having a brilliant idea, you know, cutting your nuts off, be my guest. It's not that big of a problem for me. I mean, you have the right to do so. You can dispose of your body the way you see fit, for what I'm concerned. The entire thing about this gender war, for me, it was much more toward what he talks about when he says it's gonna abolish this day program, right? I mean, if you do believe in democracy, right? Last time I checked, democracies are run by the majority. So it's important to remember that although you might be the majority, you can't just overstep or putting your boot on the face of the minorities, right? They deserve respect. But one thing is having respect. The other is letting a very small but noisy and loud minority to impact and to influence to such a great degree what the majority is going to do, or even limiting the majority, the way I see it. And again, you might disagree with me, you might agree. It's just a matter of opinions at the end of it. And I do think, yeah, that abolishing the day operations and programs, it's the right thing to do if you want to get back to merit, because in and of itself, it was another form of discrimination. It's like you're trying to cure a discrimination with another. I don't see a scenario where it plays out long term. And also, it brings in a lot of inefficiencies and waste, right? While if you just base your choices on merit, who cares, right? I guess the most important thing would be having the right person for the job. And I don't care if that person is white, black, yellow, brown, purple. I don't care. He's a male, he's a female, he's a fluid, he's a it, he's a them. I don't care. As long as you can do the job and you can do it better than anyone else, you're up for the job. Come on. Come on in. Jump in. You're on board. I don't care. You don't have to explain me what you are, or what you feel, or how you identify yourself. Doesn't matter. Only your competences actually matter for me. So I would say it this way. So yeah. I mean, I guess I'm gonna end it up here because I don't want to drag it on too much. I hope you liked it. I tried for the first time to put in a little bit of editing. It was bullshit. It was just an open source tool I used, but maybe it added in a bit of variety. The major aim was to be funny, because I do realize these subjects and matters can be a bit boring sometimes, and especially if I'm the one talking, right? So we'll see if I can keep it up. I'm not gonna lie, it's a little bit time consuming, especially when you're learning it. But I mean, if I do enjoy it, I might keep it up in the future. So to sum it up, be aware because we are getting into the storm with Trump, with the geopolitics, volatility markets, difficult and very quote unquote, and no pun, but fluid economic and financial conditions. And remember to go check out Michael Every about the economic statecraft and the grand macro strategy. I think if you really want to navigate what's going to be these 4 years of Trump, you need to understand that framework just a little bit, but you need to at least hearing that up. Maybe just one time, but I mean, it won't hurt you, right? And with that, I hope you're going to have a nice rest of the weekend, a nice Sunday, and a good start of the week. Be nice and be cool. News out.
Over the past 8 years, I have been tested and challenged more than any president in our 250-year history, and I've learned a lot along the way. The journey to reclaim our republic has not been an easy one, that I can tell you. Those who wish to stop our cause have tried to take my freedom and indeed to take my life. Just a few months ago in a beautiful Pennsylvania field, an assassin's bullet ripped through my ear. But I felt then, and believe even more so now, that my life was saved for a reason. I was saved by God to make America great again.